Hey, how's it going, everyone? This is Weston Means with eXp Realty here in the San Francisco Bay. I'm here to review the numbers for September 2024 with you that were recently released by the California Association of Realtors. I'm going to be featuring four of the counties that I serve. These aren't all of the counties that I serve. I do go to Santa Clara County and I go to the Peninsula, once in a while for clients that are referred to me by family members or past clients. Basically, I go to many places in California for referrals clients, but for the most part, these are the four counties that I focus in, those being Alameda County, Contra Costa County, Marin County, and San Francisco County. So let's dive into the numbers. So this is for the month of September. After reviewing the numbers, it looks like we've gone through the normal trajectory that we go through every year, which is that there's a summer peak around June or July in home prices, and then it comes down right after the summer, and then we usually see another last peak right before the holidays in either September or October. I think this year the peak might be in September. After the last Fed meeting, interest rates actually have increased and they've been on the rise since the last Fed meeting. And so I think demand is diminishing a little bit as we're coming into the holidays. And definitely the holidays always has an effect on diminishing buyer demand in the market. So I think until the end of the year, buyer demand is going to be pretty diminished. And we're going to see home prices fall a little bit. And now it's hard to tell or predict what exactly is going to happen next year. We are also converging on an election next month in November. So that is going to definitely have some type of effect on the market. We don't know if it's going to be a positive or negative effect, but all of these factors together could be a recipe for either positive price growth or negative price growth next year. So we'll see about that. But for right now, viewing the numbers, it looks like for the most part, median price increased month to month. That being from August to September this year, 2024, except for in Alameda County. In Alameda County, the median price went down 0.4%, which is pretty nominal. In Contra Costa County, median price went up 2.6% from August to September. In Marin County, it went up 20.7%, which is pretty high. But, as I always say in these videos, Marin County has a vast range of price points, and so the data can get thrown off by that. In San Francisco County, we saw a 6.3% increase in median price from August to September. So that's a positive movement for San Francisco. I think the peak in San Francisco might be October this year. We'll see. Year to year, prices in San Francisco County were up 2.8% this September. And in Alameda County, they were down 2.5% from last year. Same thing in Contra Costa County. They were down 0.9%, a little more of a significant drop in Alameda County. In Marin County, median price was up 6.1%. But again, the data might be thrown off here. Home sales in Alameda County were up 0.8% this September. That's pretty much nothing. 1%. In Contra Costa, they were down 2.1% from last year and down 16.3% from August. In Marin County, home sales were up 10.1% from this time last year, and they were down 7.4% from August. And lastly, in San Francisco County, home sales were up 9.7% from last year. So for the most part, we're seeing increases in sales, except for in Contra Costa County. Last year, there were 2.1% more sales, home sales in September. So that would be September 2023. And then month to month, we saw a decrease in sales of 24.4% in San Francisco County. Now, the amount of inventory is sure to have an effect here. So in San Francisco, we had 3.5 months worth of unsold inventory in San Francisco for September 2024. That was down 6.3% from August, and it was up 15.4% from last year. So there's more supply than there was last September, but there's 6.3%, there was 6.3% less supply than there was in August. And 3.5% is approaching somewhat of a balanced market for the Bay Area. For a long time, we've seen 2 or less months of unsold inventory for many of the markets. So we are seeing a positive change for supply. And in Alameda County, the amount of unsold inventory was 2.7 months, sorry. That was up 12.5% from August, and it was up 68.8% from last year. So 68.8% more listings sitting on the market than there were last September. Same story in Contra Costa County. We had 2.9 months of unsold inventory. This is the highest level I've seen in at least a few years. That was 20.8% more than August and 81.3% more than last September. So, you're approaching almost double the amount of listings for sale in the Contra Costa County market than there were last year. In Marin County, we had 3.6 months of unsold inventory. That was 2.9% more than August. Pretty nominal change. It was 16.1% more than last year, so it's pretty significant there. Now let's look at the median time on the market. Median time on the market, so what this means is how long it took for the average listing or median listing to sell in this market. And in Alameda County, that was 14 days. So that is a 0% change from August this year, and it was a 27.3% increase from last September. So it took 27.3% more days for a listing to sell this September in comparison to last September, which is good news for buyers. That means that there's less competition in the market. You have a little more time to decide, and you're probably up against less offers. Similar story in Contra Costa County. The median time on market was 19 days. That's actually significantly less competition than Alameda County, because 14 days is still pretty quick. 19 days is, you're approaching almost 3 weeks on the market there. So that means there are probably a lot of the listings are sitting on the market and not getting offers within the first 2 weeks. Now, that was an 18.8% increase from August, and it was a 58.3% increase from last September. Now, median time on the market in Marin County was 46 days. This is very typical in Marin County. Like I said, a lot of the listings are high price point listings, above 2 million, 3 million, even above 5 million. And so some of those listings sit on the market longer because they have less buyers in that buying pool that are willing to buy those type of properties. So 46 days, that was 11.5% lower than August, and then 17.9% lower than last September. Now, moving on to San Francisco County, the median time on market we had this September was 30 days, and that was 28.9% lower than August. So that means listings are selling 28.9% faster than they were this August. So just even from August to September, the amount of competition seems to have been rising in San Francisco. I think there's going to be one last sell-off in San Francisco before we get into the holidays. That's why I think October may be the peak for sales in San Francisco this year. Year to year, that was a 5.4% increase. Somewhat nominal, but listings are staying on the market a little bit longer than they were at this time last year. So a little bit easier on buyers in this market. Now, if you have any other questions about this data or any other data around the Bay Area, I'd be happy to go through the numbers with you for Solano County or even Napa, Sonoma, Santa Clara, of course. Any other counties that you're interested in, please feel free to comment in the comments below or just text me or email me directly, and I'd be happy to help. All right, see you guys later.